Good morning, everybody. We have a mixed to higher trade in the grain markets here early on Tuesday morning. It is 6:30 a.m. Central Time. March corn futures up 2 3/4 at 553 3/4. March soybeans up 19 and a half at 1403 1/4. March Chicago wheat is lower, down 5 cents at 659. March Kansas City wheat is down 7 3/4 at 636 3/4. March spring wheat is down 4.5 cents at 633 1/2. Last night, I ran another live stream. I would say that it was successful, I think. This one was about capture and carry. The recording is available on YouTube, on Facebook, and also on the podcast app. I know I did have some internet issues. They only lasted a few seconds here or there in the video. The podcast is real clean. But this was, I think, a good discussion on capture and carry, a very basic overview of how it's done, some key things to look for. So make sure you go and watch that if you were not able to tune in live last night. To get into some of the headlines this morning, new crop corn and soybean futures traded fresh highs overnight. The DEES 21 corn contract traded above 470 for the first time. The November 21 soybean contract traded above 1225 for the first time. So I think there's a couple things going on here. I think we've got a real acreage battle on our hands this year. You know, in recent years, we've been oversupplied, and it was more of kind of a battle to see which crop could get less acreage, like neither crop really needed it. And this year, you've got tight balance sheets in both crops, and really both crops need to see an increase in acreage if these balance sheets are anywhere close to reality. So I think that's part of it. The other part of it, I think, could have something to do with early anticipations regarding the new crop balance sheets, or 21-22 balance sheets. We saw USDA's projections last week, and they're projecting essentially that we're going to have a tight domestic corn and soybean situation through the 21-22 marketing year. So these new crop contracts acting very, very well here. The extended weather forecast is wet for a good chunk of the Corn Belt. During the first week of March, significant precipitation is being forecasted for a good chunk of Iowa, Illinois, Indiana, Ohio. In addition, you will see a little bit of drought relief in eastern North Dakota, parts of South Dakota, a lot of Nebraska, Kansas, Oklahoma, and Texas. The mid-south and southeastern parts of the country will be very wet. So you've got a little bit more rain in the forecast. I don't know that this is going to be a drought-busting event necessarily for the northern plains, for the western Corn Belt, but the precipitation is certainly welcome. Interest rates are rising. The yield on the U.S. 10-year Treasury note traded as high as 1.37% yesterday. That's the highest in about a year, highest since February of last year. Rates are still historically very, very low, but they've risen sharply this month. Now, the Fed, of course, has pledged to keep its benchmark overnight lending rate near zero for the foreseeable future. Most analysts don't see an increase from the Fed until 2023 at the earliest. But your long-term money has gotten a little bit more expensive here, and that's something to keep an eye on if you're farming, if you're borrowing money, or really just in general. Additional pig disease in China has hindered recovery efforts. China has been attempting to recover from this African swine fever issue, which of course emerged a couple of years ago. Depending on which estimate you are to believe, the African swine fever wiped out 40 to 50% of the country's massive hog herd a couple of years ago. According to the Chinese government, that hog herd had rebounded to near 90% of its normal level as of late November. But now you've got some fresh ASF outbreaks in addition to some other diseases that have hindered recovery efforts. I don't know that this is the biggest deal in the world, but a failure to recover, or even worse, some steps backward, could certainly be a negative for corn and soybean demand. And we know that they have this huge import program that's ongoing. Energy markets continue to surge. Spot month WTI crude oil futures traded as high as $63 a barrel overnight. That's the best since January of 2020. So pretty much all of your energy markets are back to what I would call pre-COVID levels. Spot month heating oil traded as high as $1.89 per gallon overnight, also the best since January of last year. Last week's freeze in Texas hurt U.S. oil output. They have a slow increase in output from OPEC countries, but it hasn't really hurt the markets to this point. Friday is first notice day for March grain futures. Be sure to examine any remaining open positions there. The cattle market started the day sharply lower yesterday and was able to rally back and close with some more marginal losses. We actually had a higher trade in the feeder cattle market. Remember, that cattle on feed report was maybe a little bit negative because of that higher placements number, but the market did not really act very bad at all. In the outside markets here today, the stock market had been lower. It's kind of mixed. The Dow's up about 10 points. S&P's down 17. Gold's up $2. Silver's down a little bit. The U.S. dollar is just marginally higher. Crude oil is up 44 cents at 62.14 in the April WTI, off of the overnight highs, but still higher. The bond market is about flat. Remember, if you guys need some more information from me, as always, you can go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. If you would like to know what I'm doing every single day of the week in regard to grain marketing, in regard to what's on my mind with these markets, all sorts of interesting charts, graphics, information, check out this subscription service. It's $49 a month. You can cancel it at any time. It's billed automatically to your credit card through PayPal. You don't need to be a futures or options trader to follow the advice in here and to follow a lot of the ideas. I've kind of created this thing so that both the trader and the farmer who has no interest in trading can participate in a marketing plan. So if you're interested in that, certainly check that out. If you have any questions, send me an email to info@standardgrain.com. Everyone have a great day. I will talk to you same time tomorrow morning.